Michael Stevens here with Coldwell Banker EvenBay Real Estate. Another segment of Keep It Real. Today's topic is interest rates. Everybody's kind of a little bit nervous about interest rates, and we all watch the evening news, and we all know the Fed raises the rates over the last several months. But we're here today with Donnie Fatobene, Senior Loan Manager at Farmers Bank. So he's going to give us the ins and outs of exactly what the Fed does compared to how it affects mortgage rates. Yeah. I think there's that perception, when the Fed comes out and announces a 0.5% or 3/4, well, mortgage rates goes right along with it. They're not actually connected, are they?
Well, they're connected, but it's only one factor that really has the effects on interest rates. So the bond market, the consumer price index, there are so many factors that actually affect the long-term mortgage rates. Okay. So part of that is that Fed rate really tends to affect more on the short-term rates, your credit cards, things such as that, more than the long-term rates, like your 30-year fixed mortgages. So yeah, there are so many factors. I wish I could sit here and tell you exactly which factor, but there are so many factors that really affect the rates. Yeah. We have actually seen, and it just happened, where the Fed raised they had a 3/4 rate. Well, the week after, the rates actually crept down.
Yep, the mortgage rates went down. So just because the Fed is here doesn't mean that the mortgage rates are parallel to that.
That's right.
And that's important for the buyers to know, because when those mortgage rates go up, it affects your buying power, your pre-qualification. Yes. It affects all that. So it's a big concern. So, clarify with, your local bank, like Farmers, exactly what the 30 years is or what the adjustable is.
And what your options are.
Yeah, right. What your options are. So we could talk all day about, what rates are doing, mortgage rates, and, a 30-year fix compared to, the adjustable, and, that changes from every situation, case by case.
And you know what? Rates are so fluent that you will get rate changes. You can see big swings throughout the day. Yeah. So, the rate that you get at 10 o'clock could actually be different than the rate when you call back at 1 o'clock. There are so many factors that really weigh into where those rates are.
So that's a good point. Just real quick, when somebody comes in, they make loan app or you can lock the rate in. You can. So you can, just real quick, how does that work as far as locking that rate in and how long it lasts through the process? I mean, once you're under contract, or exactly when can you lock a rate in?
So you can actually lock the rate with us once you have a full contract, okay? There are some places out there that will do some things.
They're paying for that?
But they're paying for that, okay? Yeah. And you're getting usually an inflated rate. So they're going to let you lock the rate, but it's inflated over where the true rate is for the day, because they're kind of hedging, not knowing where those rates are going to go, okay? So as far as the time frame, really it's all going to depend on the closing date. So if you anticipate a closing in 30 days, you can lock your rate for 30 days.
Lock it in.
If it's a longer period of time, there are some difference pricing based on those lock terms, as far as 30 days, 45 days, 60 days.
Okay. Well, and finally, let's really talk about what's the rate, where's it at right now?
So the base rate is on a 30-year fix. The base rate today is right around 5 1/4.
5 1/4. All right. Let's just face it. These interest rates that we've seen over the last couple of years, historically low. Yeah. I mean, I asked a financial CFO of banks, and I talked to him about this, and I mean, we didn't see rates like this. I mean, the Great Depression.
So, truthfully, 5 1/4 is still historically low.
Historically low.
Okay, if you really look and take a look where rates have been over the last 30 to 40 years. People would have killed to get 5 1/4. Back in the days when the rates were double digits, 5 1/4 was fantastic. So, those rates that you saw where the 30-year fix actually dipped below 3%, there's a chance we may never see that again.
We may not. I mean, we're talking Great Depression. We're talking about the recent historical low was from the financial crisis that our country went through, which kind of dictated a lot of that. We're probably going back to normal, and we may never see it again. So it is something that we have to accept. It's the new norm, which is still great, competitive, good opportunity.
So people, we've seen it over the last couple of years when those rates were in the low to mid 3% range. people hear that and they think, all of a sudden it's sticker shock when they come in and the current rates are in the mid fives.
Yeah. But
even though, like we said, historically, mid fives is fantastic. So it's just one of those things to educate our borrowers where the rates are and kind of give them their options at that point.
Hey, this is great information for all the buyers out there that are concerned with interest rates. Appreciate you coming in.
Absolutely.
If you guys need to find out what the rate is, get pre-qualified, give Farmers Bank, a loan officer, a call. They do an incredible job. And call Coldwell Banker EvenBay Real Estate Agent today for all your real estate needs.
Thanks. Have a good day.